there are people in America who do not have a bank account. And I set out from the very beginning to challenge the financial system.
Hi, my name is Victoria Coker, and I'm one of the Interledger Foundation ambassadors and founder of Black Web Fest. This is a podcast takeover. This series will highlight the guests that are featured in my research project, Unbanked in America, exploring the financial divide, which draws on insights from the 2021 FDIC National Survey of Unbanked and Underbanked Households report. My project explores the cities with the largest unbanked populations, uncovering the systemic issues and personal stories behind the statistics. Today's guest is changing the financial landscape for underserved and underrepresented communities. She's a serial entrepreneur who launched fintech startup CapWay and is now working on new ventures, including the entrepreneurial community plus venture studio Grits and an AI startup Mindful. She is the co-host of the podcast Rich Lessons and has been featured in Forbes, Inc., and Essence. She has done a TEDx talk titled How to Bring Humanity Back to Finance. Let's welcome our special guest, the phenomenal Sheena Allen.
Hi, my name is Sheena Allen. I'm the founder of CapWay, a fintech company, and also Mindful, an artificial intelligence startup. Born and raised in Mississippi, and continue to my work of filling opportunity gaps for the next generation.
Yay. Okay, so first question, what does the term unbanked mean to you?
Unbanked to me is someone who does not have a bank account at all. Underbanked, of course, is more, I have a bank account, I'm using alternative services. Unbanked is literally, I do not have any form of a bank account. I am carrying cash. I'm using someone else's bank account. I am using alternative services. But as far as having any form of a bank account, I do not have one.
I think that's the common thought where other people kind of mix underbanked and unbanked together. But it's good to have like a clear definition from different people, just because some people have never heard of the term at all. And the more you're in this space, the more you learn, right?
Yeah, a lot of times people use unbanked and underbanked interchangeably, and they're not. They have two totally different definitions. So there is unbanked and then there is underbanked. But to your point, even when we were raising funds from venture capitalists, I had a lot of them ask me what did unbanked mean. So it's not surprising that not everyone knows what that word means.
That's crazy, like to know that like VCs, the people who are in like the trenches of finance don't know the definition. And that kind of tells a lot more about them, right? By not knowing certain definitions than people would think.
Well, I think the thing that I found as a founder and a CEO of a fintech financial technology company when pitching was that a lot of the VCs are just people who live in a bubble. They just don't know, I guess you would say. There's a lot of trendy type of thoughts or money that goes towards financial inclusion, but really knowing the in-depths of what it means and what it's like to be unbanked and underbanked is completely foreign. A lot of them was like, oh, that's like third world country problem. We don't have that problem in America, people who are unbanked and underbanked. There's banks everywhere. So we for sure, as a company, had to do a lot of explaining of, yes, there are people in America who do not have a bank account.
Yeah. Before kind of working with the Interledger Foundation, I mean, obviously, I thought people probably didn't have bank accounts because I know family members who don't really like have bank accounts and stuff, but I didn't know what the term meant and I didn't know the impacts, right? I didn't really think about how that impact people and how it was like so widespread, or what were the reasons people weren't unbanked aside from just not wanting an account, being too afraid to have an account. What were the other key factors? And I'm learning along the way all the factors and all the things that really are based on some discrimination, some historical injustices and inequities, and how they all are at play and are impacting people in much greater ways than people may have originally thought. So digital financial inclusion is part of the United Nations 17 Sustainable Development Goals. It falls under number 10, reducing inequality. What does digital financial inclusion mean to you and why is it important? We kind of tapped in on that, but would love for you to provide some more clarity on it.
Yeah, I think part of that is what's going on just in the world of technology. And to be clear, technology is not new. Technology has been around for a very, very, very long time. But I think the phase that we have moved into in this new era, as millennials, we say we're caught in between two eras. We know going outside and then we know internet. Whereas Gen Z, we make the joke that they only know internet. And so the way that we think about technology, the way that we think about digital access is very different in the last 10, 20 years than we will say 30 or 35 years ago, 30 or 40 years ago. So when I think of digital access, particularly for financial inclusion, honestly, I don't think it came to the forefront for the government or anybody within that realm, in my opinion, until COVID hit. And that was because when COVID hit, everybody got their check. And although the unbanked issue has been around for a very long time, and no one has necessarily solved the unbanked issue, or really, in my opinion, put a lot of emphasis on solving it, they didn't have a choice but to go into financial inclusion and digital access, because when those checks went out and you had almost a third of Americans like, how am I supposed to cash this check? I don't have a bank account. They was like, oh, this is a real issue. How do we solve it? And so I think when I look at now it being number 10 on the list of things we gotta, kind of put an emphasis on, I don't think that would have happened. And I think it did happen because of COVID. And it woke the government up to realize that people don't have bank accounts.
Yeah, that totally makes sense. Like people realized, wow, okay, how can we disperse this money, right? And people can't be in person, and now we have to figure it out. And now as we're growing, as remote teams are growing, more people need to get money different ways, different transactional ways, digital ways. So yeah, people were more woke to that during COVID and the pandemic. And now they have to figure it out backwards. Now they have to figure out all the solutions to make it happen. And people probably figured it out, like how to get their checks, even if they were unbanked.
Yeah, definitely people were going to, but they were doing things that they had always done. It just woke the government up to realize like they were not going to banks. They were going to the bodegas, or they were going to the check cashing place, or they were going to the local grocery store and their money services, or Walmart. Walmart actually is probably number one or number two when it comes to people for unbanked and underbanked. Their money service section does a lot of servicing to the unbanked and underbanked community, which a lot of people don't know or realize that. But the data supports it. And so I think it wasn't about the people didn't or couldn't find ways to get that check cash. I think it was more sort of a wake up to the government, to the federal side of saying like, oh, this is an issue. Because I mean, honestly, pitching to whether BCs or just doing general talks, a lot of people, if you're from a big city, for example, you don't realize that Mississippi doesn't have a Bank of America. Because in a lot of people's mind, national banks, your big banks, your national banks, they're national. They're everywhere. And I'm like, yeah, nope, that's not how that works.
I didn't know. Okay, so Walmart now is a financial institution, everybody. You should know that. I didn't know.
A lot of big companies make more money. Don't get me wrong, Walmart makes a lot of money in general, but their money service area makes a lot of money for them. And one of their biggest, not one of their biggest customer is by far lower income, unbanked and underbanked.
Wow. I mean, I can see the other services that Walmart offers, but I didn't know that the financial institutions, that was really a support system for them. So that's crazy to me. And then obviously I come from a big city. I come from New York. So for me, I didn't know until starting to do this research about banking deserts, right? I know about food deserts, and it's kind of the same thing, and they have overlap. So it's kind of crazy to hear that there's places where people can't access a bank. But yeah, they don't have a lot of banks. Instead, they'll have payday loan services or check cash in places, which is sad, right? They don't have the access to go to a bank to talk to a teller. It's one thing about digital financial inclusion in a way where, okay, you could do this online and you can, go on Venmo. But when you need to talk to someone and you need access to a mortgage, or you need access to a loan, or you just need access to figuring out maybe even savings, right? You want to save, you want to get the best percentage interest. You want to talk to someone. There's nothing like talking to someone in person or having customer service to be able to talk to. And when there's banking deserts, you don't have that access.
Yeah, my grandmother, who's passed away now, but even my dad, who's still here, it's been a struggle to get them to move into digital technology and financial inclusion, because exactly what you said. We've only ever known going to the local check cashing place or going to the local grocery store, and so now getting them to be like, hey, put your social security number into this app, and we're going to teach you how to do financial inclusion through this digital platform. It's been interesting. They've adapted. But areas, especially across the South, not saying it doesn't happen in the Bronx. It doesn't happen in the Midwest. It doesn't, because it does. Brooklyn, Bronx has a high population of unbanked, underbanked. New York, if I'm not mistaken, my numbers might be off. I believe New York is top 20.
Yeah, it's like fifth or sixth in terms of
Yeah.
the largest unbanked populations.
And so I think that goes to saying people across the South, because we have the largest populations for unbanked, underbanked, and banking deserts, it still plays a role, because even though there's a bank in almost every corner in Manhattan, you still have the fact that New York has a huge population of unbanked and underbanked. And so I think there's work to do for the reasons that we are unbanked and underbanked, and there's reasons that you mentioned early that people don't account for of why people are unbanked and underbanked.
Yeah, there's definitely a lot of key factors. You tapped into talking about your grandmother. I read an article, Forbes article, that your grandmother was unbanked. So I would love to hear about that experience and how it was growing up in Mississippi, because that's where you're originally from, right?
From Terry's little small town right outside of Jackson, so central Mississippi. My grandmother and my great grandmother were both unbanked. My granny passed away at 92, 93, but she one of the most wisest ladies you would ever meet in your life. But she had a second grade education. She would tell me I worked for 25 cents a day. When I was growing up, took care of her sister. My great great grandmother passed away when she was younger, but she never used a bank account. She never had a bank account. Honestly, all of her banking was done through my great aunt. So if she had needed something, my great aunt would keep the money, usually in her bank account, or she would try to navigate things for her. In the same way with my grandmother. My mom navigated the financial landscape on behalf of my grandmother because she never had a bank account. She had a bank account maybe in her later years, but that was my mom going and taking her to the bank and showing her how to open up a bank account. And even then, she didn't necessarily use it. My mom kind of was on the account and she kind of helped navigate it. But the amount of people in my family who are unbanked, underbanked to this day, people in my community who are unbanked, underbanked to this day, is still the numbers are still pretty high. If anything, you find the young generation, they now are using a Cash App, which most people don't realize it, but Cash App, their customer base for the most part is lower income. It's people who have historically been more underbanked, not necessarily unbanked, but underbanked. Chime, there's more people who have been underbanked. And so a lot of people don't realize that it looks away on the front side, but that data shows that that's the population who's using it. But yeah, my grandmother and my great grandmother, and it went to a lot of reasons outside of not being in the banking desert. We had one bank in Terry, Mississippi, by the way. One. It's a local bank. So it's not like we were surrounded by banks. If you've had a chance to speak to people who are boomers or older, their reasoning for also being unbanked, particularly in the South, particularly for Black, is there's a lot of reasons outside of just not having access to a bank. It's going to be trust issues. There's going to be discrimination issues. There's going to be, I prefer to go over here to the check cashing place because they call and wish me happy birthday. And they're going to say, hey, Miss Flora, we got $2,000 waiting for you if you need to come back and borrow some money. It's going to be a lot of reasons why you're going to find people like my grandmother and my great grandmother who are unbanked, underbanked. Once again, particularly in the South, they go far beyond just not having access to a bank.
I think a lot of people forget, especially when they're in technology, that you can't solve everything with technology. Technology is not the solve all. And I think sometimes when people are developing technology, they're like, well, why isn't things aren't working? Or why aren't people adopting it? Right. And oftentimes there's some greater problems here in America, systemic racism being one of them, that impact people not wanting to use technology or not trusting institutions. And then also just a level of community and trust. I think trust is one of the biggest things.
And they want to touch their money. The older generation, for sure, we laugh about it, like the rap videos of today of like they want to hold a stack of money against their ear. But if you look at history, we're talking now a true financial history, and particularly from systematic racism in Black and brown, touching their money, the trust of I want to see my money, I want to touch my money was actually really big. So you see people say, I keep my money in my house, in my mattress, in my closet. There are reasons for that. There's a historical reason that people who were unbanked, underbanked, or people who had a bank account, they kept most of their money where they can touch it. They always had access to it. And we've seen it in the movies. And I think it's funny when I talk to people about even the movies that everybody knows, and I point it out, and they'll be like, I never paid attention to that. The Color Purple. when Celie's sister was trying to get back into America and Mr. went out to the coop to pay for the immigration. The money was inside the coop, at the chicken coop. He had money at his house that he could access at all times. That's where he kept his money. The movie Soul Food, the granddad, he had his money in the TV. We see it so much and we just don't pay attention to, but that is real life, that people kept their money where they could access it. If you were a Aretha Franklin fan, Aretha Franklin would tell you, pay me in cash. And her reason for it was they would always steal and or they would not give Black artists their money in full. So before her shows, I want to see my money. I want to count my money. It's going in my purse, and my purse is coming on stage with me. And those are facts. So we've seen it in so many ways. I think we just don't pay attention to, because most people don't understand the true impact of discrimination, lack of financial access, Black and brown, systematic racism in the role that it's played. But we see it all the time. We don't pick up on it.
Yeah, I totally agree. I think sometimes we see media plays so much of an impact on our lives in terms of historical references and capturing a part of what's happening in society. And so definitely people need to watch a bit more and pay attention sometimes, because entertainment is good and all, but it's also good to pick on those pieces because they do provide a level of history, also sometimes for some people therapy, right? So yeah, media is so big, but I love that. I love that you gave those references because it's something that but you don't pay attention to. Like you don't put it together. So we kind of touched on some of your history and where you grew up and your family life. What inspired you to create your fintech company, CapWay?
Yeah, so CapWay is not my first startup. I started my first startup in college. It was a mobile studio. So it was a lot of apps based around like photos, videos, very fun apps. But I left Mississippi fresh out of college. I moved to Silicon Valley, so the Bay of California, and ultimately built my first company out in Austin, Texas, which is considered the tech hub of the South. Got my first mentors there, learned a heck of a lot from some amazing people. But it was interesting because I was, at this point, I'm traveling more. And where I worked at in Austin, there was a bank literally almost on every corner in downtown. And it was a bank literally up the street from my apartment. And just traveling and seeing people, how people handled money, how they thought about money, their access to money. And then I would go home to Mississippi and nothing had changed. People were still going to the grocery stores to cash their checks. My town still only had one bank. Up until recently, we never had a national bank in the state of Mississippi. We have a Chase Bank now. Chase, I think, came here about maybe a year or two ago. Still don't think we have a Bank of America. I think there's like a Bank of America ATM in Tupelo, but I don't think we have a full like Bank of America branches throughout the state. So nothing had really changed. It was still community banks, credit unions, more like local banks, regional banks. And for me, it was about combining two pieces. It was about combining my professional experience of technology, digital access, but combining that with my personal experience of knowing what it was like to be unbanked, underbanked. And I knew what it was like because I'm seeing my grandmother, I'm seeing my great grandmother, I'm seeing my uncle. And CapWay to me was about how do I bring those two together? Because most of your fintech companies, especially prior to CapWay, they were built along your coastal areas. They were built from the guys in New York. They were built from the guys in California. They weren't necessarily built from someone who understood and was the difference in what it was like to live in the South. And so that was really the why for me of building CapWay. The name itself, CapWay, stands for a new way of doing capital. And I set out from the very beginning to not just focus on unbanked, underbanked, but how do I actually challenge the financial system? Because the financial system was not meant for us. And that's just the truth. It's not just saying it. That's historical data that show there's a historical reason of why and how the system was built. It wasn't meant for certain people. And so for me, it was how do I actually challenge the system from a systematic standpoint, but how do I also challenge it from a digital standpoint? Why did it take 3 days for ACH to go through in 2000? Other countries were well ahead of us. So even when I was pitching to investors and they're like, oh, it's not an American problem, or we don't have the issue in America. I'm like, we do have the issue in America. And in fact, there's a lot of countries who are well ahead of us in certain aspects of technology to help what they're doing. When Jack Dorsey, who's one of the co-founders of Twitter, when he was taking crypto and doing things across the African continent, I'm like, hey, we are behind and saving people in America who don't have this access. And so that was my reasoning behind starting CapWay.
That totally makes sense. Like trying to challenge the systems, which I think is hard, right? What was the biggest challenge you faced trying to build your company?
Ooh, if I had to pick one.
You can list a few, but what was the biggest challenges? We'll say that. What's the biggest challenges that you faced?
Raising money, honestly. And when I say that, I'll go. I'll give a more context to that, because that sounds very like raising money. Fintech, financial technology, it's a very capital intensive industry to build this product, to build this service, to build this company. You can't bootstrap it. And bootstrapping means you take your own money, invest it, get revenue, reinvest it. You can do that with like a photo app. You can do that with certain things. You can't build a bank by bootstrapping it unless like your dad is a billionaire. And my dad is not a billionaire. So I had to go out and raise money. The odds were already against me as a Black woman to raise money. Again, from a data standpoint, in America, Black women raise less than 1% of VC dollars. Not even a whole one, less than 1%. So that number was against me in itself. Then we get into Black women who are in fintech, and that number goes even lower. Raising money was hard in the beginning because I'm coming out and saying, hey, I need $2 million, $5 million, $10 million. And I'm saying this as a Black woman from the South with the country accent. And I'm coming to them and saying, I'm doing this for people who are unbanked and underbanked. That was an issue because one, most didn't understand what unbanked and underbanked meant. A lot of people equate unbanked and underbanked strictly to poor. There's no money in that space. And when you are raising money from investors, the story is great. Your reasoning is great. But their number one thing is, how are you going to pay my money back times 10, times 100? And for a lot of them who didn't understand, and even sometimes when I presented the numbers, unbanked and underbanked immediately for them equated to poor. And there's an infamous saying, it's expensive to be poor. And so I would go through the numbers and saying, hey, if people who are unbanked, underbanked don't bring in money, can't bring in revenue, then why are pawn shops there? Why are check cashing places still there? If they don't bring in money, why does Walmart do so well in their money services? I'm literally showing all the numbers and the data around why just because someone is lower to moderate income doesn't mean they don't have access or they don't have money or they can't put money into the economy. The economy thrives off lower income. Banks thrive off lower income. They made $18 billion off overdraft fees. There's money in this area. And so that was probably by far my biggest hurdle of getting them to fund a product that they didn't necessarily understand. And not only did they not understand it, to them there was no money in that space. Although again, banks, the financial industry, in a lot of ways have thrived off of people who are lower to moderate income, unbanked and underbanked.
So how did you kind of like bypass that?
FOMO is real, I think in a lot of ways, but also particularly when you're raising money. And I ended up finding an investor who had the connections, had the money, but understood what I was doing. And it was Gary Tan, who is now the CEO of Y Combinator, an enormous and well-known accelerator. But before that, he was the GP at general partner at Initialized Capital. And Gary is an immigrant. And so when I pitched to Gary, I don't know if I got a minute into my pitch. It went from pitching to him to having a conversation with him. And because he was an immigrant and because he understood very well what I was talking about, he wrote me my first big check. And from his network, we were able to raise kind of from there outward. But it took me finding someone who understood. If had I not come across Gary and continued to pitch to people who sat in their bubbles of their $100 million, $500 million funds, and had no clue that you can drive for 30 minutes through Mississippi or Alabama and never see a bank, I don't know if or when we would have been able to raise.
I mean, I think that's obviously a blessing, luck, whatever you want to call it, like just getting connected to one person where they kind of are able to use their network to kind of support you, and you pitching, obviously, something that made sense, that people could actually see. You had the numbers, you had everything there. And so in that way, you were able to get the funding, even though it was a struggle. And I think a lot of people who are looking for funding now could possibly learn from that. Like you didn't stop there, which is amazing. So you worked on CapWay. I know for CapWay, there's a financial literacy component there. Why did you decide to kind of like add that?
From the beginning, even though I knew I wanted to focus on providing access to banking in whatever way, whether that was through a CapWay debit card or whether that was giving access to somewhere local, I'm a firm believer that if you don't provide someone with access to knowledge, that giving them access to money or a bank account, you're still having a big gap there. And I think we see it for lower income. We've seen it for people to make a lot of money. You give an NBA player a whole bunch of money and they have no clue as far as financial education, financial resources, how money works, and they go broke. It's the same way if you give somebody who made $20,000 a year, but they have no clue they could have invested X or that they could have, the same amount that you can pay for your Nikes, you could have invested in Nike stock. So many things in pieces. And I felt that I was doing a disservice by giving one without the other. My grandmother, she would always tell us growing up, you can't blame someone for what they don't know. And so when I think from a financial standpoint, particularly for those who have lacked access to the system, have lacked access to those resources, I didn't want to provide the resources in the form of like, here's money or here's how you get a bank account, but not give them the information of this is how money works. I feel like I was doing a huge disservice by not offering financial information, financial resources, financial literacy as part of that package.
Yeah, that totally makes sense. Like, I think growing up for me, I had a bank account when I don't even know, maybe when I was like 10, 12. My aunt encouraged my mom. I got like this kid's bank account. But then later in life, got money and I didn't totally waste it. But I didn't make the best decisions financially. And that's because it was like the miseducation of finance. It's like, okay, you spend money, but like, where do you get the money back from? How do you invest properly? What do you invest in?
And to be fair, one thing that I can say from a lot of customer discovery and research and data at CapWay, people who lack financial knowledge has nothing to do with your economic status. I know people who have a lot of money who have no clue when it comes to financial education, financial literacy. So I will say that I think that one of the things that we miss when we talk financial literacy is we immediately say like, oh, people who are lower to moderate income needs financial literacy. No, I know kids at Harvard right now who lack financial, like, I mean, they can go to mom and dad and say, I need money. But as far as truly saying, I know how money works, I want to put myself in the best position to do X, Y, Z because my financial literacy level is like a 10 out of 10. Yeah, that's not the case.
Yeah, it totally makes sense. Tying back to your roots in Mississippi and it being the largest unbanked population, I'd love to ask you. So we talked about financial literacy, we talked about banking deserts, we talked about a bit about financial trauma. What are other key factors that you think cause people to be unbanked in Mississippi in particular, or even in the South?
Yeah, I think that having that human aspect to it, people just becoming really familiar with if they cash their checks at the local grocery store, they became really familiar with the person at the local grocery store and they felt comfortable there. It was, my name, my name. It's just we built this really great relationship in that way. Discrimination, once again, historically, we know what that has been like, particularly for Black and Brown. So the discrimination piece, and once again, that's why they kept money in their house. I want to touch it. I want to see it. You can't take this from me because you don't even know where it is. It's hidden somewhere that you can't even access it. And I don't have to worry about banks stealing from me. In today's time, that's actually an issue for a lot of people. Banks steal from me. And unfortunately, when we see it on social media, we see the lawsuits at the Wells Fargo because they were quote unquote stealing money or taking money or whatever the case. If you think about the amount of people who don't have trust in the system today, that was times 10 or times 100 30 years ago, 50 years ago, 100 years ago. And so it also is lack of trust. So, of course, if I say banking deserts, the trauma from discrimination. One thing I would say from being in Mississippi is a lot of times, and it's not everybody, by the way, but a lot of times when you speak to people in your deep South, this is your Alabama, your Louisiana, your Mississippi, most of those people in those areas, and I speak for my family members, a lot of my family members, they never leave that area. My great grandmother, for the most part, had been to New Orleans because we have family in New Orleans. But outside of that, she never really left this part of the South. And the world seems really big and scary in a lot of ways to a lot of people. And I'm not putting my money into a system that I don't trust. I don't know. It's bigger than life for me, and I'm not going to touch that. there is a lot of reasons. Do believe we've made a shift in this new world of financial inclusion. And a lot of that has come from fintech. It's come from your cash apps, we're just being honest. It's come from your chimes. It's come from your capways. It's come from people really fighting for something better. But we still have a long way to go. And I think people still discount the fact that we still have a long way to go in the financial inclusion space. The numbers of unbanked, underbanked have come down. In the latest data that I saw, the numbers have come down. But I won't say the data is skewed. But I will say data doesn't always tell the truth. And so, speaking to the original question that you asked me, I think a lot of times there's the reasons, and then there's also the reasons that even data don't tell the truth about. And an example I'll give of that is I remember speaking with a really well-known research firm, and they were doing a lot of research around financial inclusion. And part of that research was they were sending people out to lower to moderate income, unbanked, underbanked households. And it wasn't the universal basic income that they're trying out now, which they are trying, but their research was more around, we're going to give you $500 a month, or we're going to give you $1,000 a month. And then we're going to come in for like 2 days, 3 days, kind of stay around, see how you operate, what are you spending it on, how does things work. And I remember distinctly telling them to their face that, yeah, that does not work. Because if you give me $1,000 and I know you're sitting in my living room for this research, I'm not going to spend $1,000 the way I would if you weren't sitting in my living room. I said, the truth is, someone who makes $10,000 a year can get $10,000 back from a refund check, and I'm probably going to go buy a Gucci bag. And that's just the truth. Data's not going to tell you that. Data's not going to say, oh, they took their refund check and went and bought a brand new TV, or they bought a Gucci bill, or they've been dreaming of going somewhere and spending money that they shouldn't spend here. Data doesn't say that, but this is the reality of the world that we live in. And so there are a lot of reasons, and a lot of those reasons don't show up in data. And they will never show up because the way they do their data and the way they try to do their research, when you don't understand that audience. Because understanding and human connectivity is a huge piece of it. You're never going to get your true answers.
Yeah, I think that is true in a way, right? So everyone's like, data doesn't lie, but it definitely is skewed. And I think when we do surveys, especially about people who are unbanked, underbanked, underserved, those people, right? If you're sending out a survey to someone who lives in a home, right? You can possibly get that information. But there's people who are homeless. So that's one thing, right? Then there's people who are undocumented. So that's another thing. And these are the communities that are deeply impacted. Or maybe there's people who live more than, one family lives in a home. And so now they can't even say, I live in this home with someone else. So it's only that person in that household. So it's skewed for those populations. So you can't get that data accurately. So that's why it's so important to have like these conversations, right? These one-on-one conversations, but also conversations with the people who are in the trenches doing things instead of people who kind of think that they know those communities, or they're like, oh, well, I could solve this issue with something. Sometimes it's not that easy because the data isn't accurate.
Yeah, it's no different from you finally had access to a lower income based apartment, and they come around and only the mom and the kids can stay there. Hey, do you have a man staying here? Of course not. They're not going to tell you that their boyfriend is staying there or their fiance is staying there, because they don't get kicked out. And I only can afford this lower income apartment. It's the same way when it comes to finances across the board, not just a lower income apartment. It is how much money do you make. If I give you $1,000 a month, what are you going to do with it? Are you buying luxuries? How are you treating yourself? And I think you should treat yourself, by the way. I want to just make that clear. I don't think that every dollar you should get should go to bills. You should pay your bills. Your bills should be paid. But it pains my heart when I see people who are literally struggling paycheck to paycheck and they never get a chance to, I don't know, once a year, get your nails done, get your hair done here and there. I think it's for your own mental health. But I say all that to say, if you don't understand, which was my biggest advantage of being from Mississippi and building CapWay, if you don't understand how the market works, if you don't understand the people who are part of that market, you're going to miss a lot when you're building it out, because some things you just don't know unless you know.
A lot of people are ignorant in those spaces, and they need the education, they need the financial literacy, they need the support. And it's tough. It's not easy. And also just changing habits. Habits are hard to change.
Yes, they are.
Do you think that fintechs can kind of help with financial inclusion? What ways do you think they can provide access to people who may not have access to digital services? Or should they even be responsible? Should that be something that the government works on? How could digital or fintech companies, like digital banking or fintech companies, really kind of support giving people more access?
I think that fintech is special. I really do. And I don't say that just because I've built a fintech company, but the financial space, particularly here in America, has so much red tape and is so highly regulated. In some ways, for the benefit of people, and that it should be regulated. I'm not saying like it should be a free for all because that would also not be great. But the way that the federal government, the feds, the government, the way that they have mandated, regulated the financial space has not caught up to the way that we do technology. Technology moves so fast. Digital access could be moving much faster, but we hit a ceiling. And I'm sure if you ask anyone who works in fintech, I don't care if it's for financial inclusion or if it's something totally different, ask someone who works in fintech, they will probably tell you that I hit a ceiling. Either I'm going to break the rules and get in trouble for it, or I'm going to ask for permission and I'm going to get denied once you get to a certain level. And the reason for that is with fintechs, we only can go so far because we have to have permission or we're mandated by the regulatory system. So I'll give you a quick example of that. Every person that you know that has any form of a debit card or a prepaid card, and I'm talking about your biggest of the biggest company. It could be a startup like CapWay. It can be all the way to a multi-billion-dollar company like a PayPal, a Cash App, a Chime. It doesn't matter. If you look on those cards, if you look at the bottom of our websites, there's always going to be a disclaimer that says, we are not a bank. We are a technology service. It's also below that's going to tell you, we are backed by blank bank, which is in the industry is considered a sponsor bank or a partner bank. Literally, I don't care, PayPal, Chime, Cash, go to the bottom of their website. It literally will say, we are not a bank. We are a technology service. We are required by the federal government to put that because we are not allowed to be banks by the standards or by the requirements. So we can only go so far as we are allowed to by our sponsor bank or by our partner bank. So there's only so much that you can do because there's a ceiling that you're going to hit. The way that we do business today in the financial world, I don't care if we're talking lower income, middle income, it doesn't matter. The way that we do money in today, in 2024, 2025, is very different from the way we did money, even honestly in 2015. But it's especially different from how we did it in 2000 and 1990. The issue is that the laws of how money works have not changed. So if I do a dispute today, Reg E has not changed from 20 years ago, 30 years ago. And the way that I'm going to probably do a dispute today, if I want to go out with my homegirls and we want to have a drink and I want to go dispute that, the law works in my favor. But the way money is done is very different. So the laws, the regulatory pieces, the federal government, I should be able to send you money and you get it in 2 seconds. And we think that happens. Well, behind the scenes, that's still not happening. So if I send you money through Cash App and you say, I want to get it immediately and I'm going to pay my 2 cents or my 20 cents so I can get it in my bank account today, technically Cash App fronted you that money because the federal government still takes 3 days. So can financial inclusion do much better with digital access, with fintech, with technology? Yes. Are we there? No. And it's not because of the technology. It's not because of creativity. It's not because of amazing founders challenging the system. It's because the system itself is not ready or prepared or matching where we are in a fintech space.
Yeah. A lot of policy and red tape around doing everything. There's so much money in it. And like you said, there's a lot of poor people who aren't benefiting the most, but getting charged the most in fees. So imagine just disrupting a whole industry. And there's so many industries that technology has disrupted. But in terms of finance, that really hasn't been broken yet. Like it hasn't been disrupted where crypto and blockchain has tried to do it and hasn't gotten there yet. But beyond that, there hasn't been a lot of disruption or innovation
I think people don't realize this also because you're not going against just the government, the federal government when you're doing this. A lot of people touch money every time you swipe your card or every time you spend money. So you're not just going against one beast. You're going up against five beasts. Because if you swipe your Visa card, Visa just got some money from that. The bank got some money from that. The government got some money from that. So you're not, it's much hard to, if you're going to beat the beast, a lot of people are going against one beast. In the financial space, it's not just one person. You're going up against four or five beasts who touched money. It's no reason if you go into a smaller establishment and they say we got to charge you 3% if you use your credit card, or we got to charge you if you don't spend more than $5, you got to pay cash. That's because when you swipe your card, that establishment is not getting that $5. That establishment is probably getting $3.75. That money comes off top. That goes to Visa, MasterCard. It goes to this bank. It goes to whoever payment rails is over here. There's a lot of people who touch that money every time you spend money. And if you were to disrupt that, once again, you're not fighting one monster. You're having to fight four or five different multi-million, multi-trillion dollar monsters. And I'm not going to say it's impossible, but I'm going to say that's not something that's going to be disrupted in our lifetime.
But I mean, obviously, we're going to hopefully start it.
For sure.
And then hopefully the next generation can kind of build upon and fight the monster, get all the heads cut off. Yeah. Fingers crossed, fingers crossed.
We've laid a great, solid foundation, and I'm proud of. And I'm proud to be part of a group who've laid that foundation. But once again, to get to the top, I think we have a ways to go.
Looking ahead, what do you envision as the next big shift or trend in fintech, especially when reaching underserved communities?
I think we definitely started with more like the debit cards. We see everybody have access to the debit cards. And then I think apps definitely took over. More people do more digital transactions versus like using their cards. I think how we handle workforce, fintech will play a role in financial inclusion of how workforce works, because the workforce is going to shift. So when I say that, what I mean by that is whether you're talking artificial intelligence, you're talking robotics, you're talking McDonald's is going to have robots making our food and only one employee who makes sure that the kiosk works and the machine didn't break. I think because we're going to have a shift in the way that lower paying jobs will have some possible shifts in the next 5 to 10 years. I think that's going to be a place that fintech is going to need to play a role for those who are unbanked, underbanked, lower to moderate income. How do we find more? And I don't know if gig workers or gig pay or the on-demand economy is the answer, but thinking of financial inclusion, thinking of how fintech plays a role, thinking of the access people would need, thinking of the problems that will come. For me, that one's top of mind, because people now are worried about, is AI going to take my job? Robots going to take my job? And those who will be impacted the most will be those who are making minimum wage or closer to minimum wage. So how do we use technology? How do we use a network, a system to help combat the other side that's going to happen? And we know it's going to happen. It's not an if. It's more of a when. It's why you walk in Target and there's more self-checkouts than there are cashiers who are checking you out. The shift is going to come in some way or another. And I think we have to figure out, how do we save the people who are losing those jobs?
So yeah, kind of supplementing and figuring out ways to kind of finance the next generation of workers.
And the next generation, how they handle money, how they think about money is also totally different. So, when I think about technology, financial inclusion for my nieces and my nephews, they don't even think about a 9-to-5, honestly. They are thinking about, how am I going to be a social media influencer? I want to do esports. So how do we bring those things into a space that works to their benefit for this next generation? Because again, the way they think about money, the way they think about working, their definition of working is not our parents' definition of working. What does that look like for the next generation? I think it's also really important. I think people seem to overlook, because Gen Z is Gen Z, but they are the future.
That totally resonated with me real quick, because I was trying to imagine this world, right? And I was like, oh, wow. Imagine in the future, right? If you are, so I'm a millennial, so in between, right? The boomers, they were like, all right, we're going to work. We're going to retire at a certain age. We're going to have this income. It's going to come in. It's, we work for a certain amount of years. They pay everything. We can live off this retired money. Right now, we're seeing that that's not really the truth. And even with Social Security, some days that might be gone, some days it may be here, who knows? And so millennials, we're kind of living in whatever that change is. But the next generation, Gen Z and then Gen Alpha, they'll actually know whatever that looks like. We're kind of the guinea pigs, but they'll know and they'll be preparing in that way. So they'll have their own savings. They may have to save in a different way. They may have to have different accounts that account for that make sure that they could actually, when they do retire, or if they can retire, they have all those things set up. So definitely that makes sense to me. Like, yeah.
The next generation or the next iteration of fintech in general, it's going to be way more gamified. And when I say gamified, I mean by the technology definition of gamification. That's going to be every time you buy some shoes, how much you pay for the shoes. If it's Nike, you have to match that into buying Nike stock or something. It's going to be way more. We're going to gamify it more and more as fintech starts to improve or improvise or change it and shift. Retirement, Social Security, you said that it's going to be a huge one. It breaks my heart when I see my waiter who's like 75. And I know that he or she doesn't have a choice. Like they have to be out there working the door at Walmart. They have to be out there being a waiter or a waitress. It absolutely breaks my heart. But that's the reality of where we are. And so how do we actually try to avoid that or at least get ahead of that for millennials and Gen Z and Gen Alpha?
Last question for you. I'd love to learn about what you're working on right now.
Yeah, so I'm still doing a lot of things in the financial inclusion space. We're at a kind of a standpoint or a shift with CapWay. So I honestly can't tell you where we'll be with that, not even next week, if I'm just being honest. But my work in the financial inclusion space won't stop. So continuing to do that. As I mentioned earlier, I think there's still a lot of work to be done in this space. And then as far as like actual startups of what I'm working on now is an artificial intelligence company. Mindful is a parent company. And our entire goal here is looking at the gaps and the biases within the space of AI and how we're building products and services to really come in to fill those gaps and work with the shifts of what's happening with AI. AI is not anything new. Artificial intelligence has been around for a long time. Generative AI, of course, is more trending now. It's much more newer. But there's a lot of gaps, there's a lot of biases, there's a lot of opportunity. And the goal with Mindful is to come in and to fill those gaps.
I love that. I love that. You're filling those gaps and people need that. I think a lot of people are unaware of where the gaps are, right? They build technology, but they're not doing the research, especially within certain communities. As we already said, some data is skewed. So you're kind of filling those things in. Where can people find you?
Yeah, so personal website is just my name, SheenaAllen.com. Social media, X, Threads, Instagram. My name is @WhoIsSheena. And then LinkedIn, Facebook, my name, just look it up, Sheena Allen.
Well, Sheena, thank you so much for doing this interview. It was really powerful. A lot of what you said really resonated with me, so I know it's going to resonate with the audience, and I'm super excited for them to learn all and everything about you.
Thank you so much for having me.